Hi, I'm Paul Goodwin, the editor of the Cabot China and Emerging Markets Report, and this is the Cabot Weekly Video Review. It's been a good week in the markets, but it also helps to illustrate why people who comment about markets can seem a little bit perverse, because it's exactly at the time when markets are steaming ahead and people are optimistic and the indexes are heading higher that we can begin to get worried. Now, people always say that markets climb a wall of worry, which means the higher things go, the more worried people become, and things generally do keep going. Trends do tend to continue longer than we think they can. But it's like the old Fed chief said about raising interest rates when the economy was perking along. He said, I'm the guy at the party whose job it is to take away the punch bowl just when the party's getting going. So if you take a look here at the Halter USX China Index, which is the basis for the Cabot China timer, you see that it's doing really beautifully. We had a correction in March that just slowed things down a little bit, and now the index is back at 5,900, challenging its old January highs. It's exactly what we like to see, and as long as it stays above the lower of its 25 and 50-day moving averages, we're fine. But if I shift over to the NASDAQ, this chart looks fine. We had a nice correction here, and it's going along very well. But if I look at the daily chart, see that in the last couple of days, the NASDAQ has gone from this kind of trend to this kind of trend, and that tends to make people nervous. It makes people nervous especially when it comes during earnings season, because a good earnings report can send stocks up and a bad one can have them being absolutely punished, and there's nothing about the underlying quality of the stock that will tell you which way it's going to go. So for a few stocks to look at, I just wanted to pull up a few charts of stocks that are reporting next week. What we find is that if a stock has been correcting or consolidating and then gets a good earnings report, that it's usually buyable immediately after. So here are a few. Here's VMware. And I really like this chart because it shows this pretty little consolidation right here, and then the stock takes off on slightly elevated volume. That will be reporting on April 20th. On April 21st, we have Boeing. Again, not an absolute barnstormer, but the stock has been going up, has a nice additional gain here, and then this very pretty consolidation right here. If Boeing is going to be bringing the Dreamliner out later in the year, and if earnings are good, I think you're going to see a large bump in this stock, which also pays a nice dividend. And then on April 22nd, one of the biggies, Amazon. People have been worried about Amazon, wondering if the iPad was going to be taking away the sales from the Kindle, which has been one of the sources of Amazon's positive performance. Again, big gap up here, then down, and now back up again. It's true, if Amazon doesn't report well, it probably will get punished. But I think those are three extremely high quality stocks that you might want to look at next week. I think they will do well if the earnings are good, and you can't say anything more than that, because used to be we would get a little inkling of what the earnings were going to be, because stocks would begin to creep up as insiders tried to buy surreptitiously, but the new regulations have pretty much ended that. So keep an eye on those three, and I'll see you again next week or 2 weeks from now. Thanks.